Guys, three major companies reported today, one of which I own. Before we get there, really quick comment on the market today. The Nasdaq started up. Pre-market, it was up. It got down as low as 2%. Finished today, minus 1.28. The Dow was up, led mostly by Microsoft, which is one of the companies we're going over today. Guys, a lot of volatility in the markets lately. What does that mean? Are we stabilizing until we go to new highs? Are we consolidating before we go lower? Who knows? Nobody has a clue. What we're here to teach is a process for finding great companies and buying them as the stocks fall, because we love red days. Stock number one, Starbucks. I own Starbucks. Do not buy Starbucks because I or someone else on the internet says it. Again, here to teach a process. Guys, they reported 93 cents per share in earnings versus 92 cents expected, 9.1 billion in revenue versus 9.2 billion. And the stock is up after hours, almost 2%. So guys, Starbucks is a stock that's down from its all-time high of 126, almost 3 years ago tomorrow, $126 a share. It pays a dividend of almost 3%. Guys, I think this is a strong brand, over 35,000, close to 40,000 stores worldwide. The stock has taken a hit. If you ask for a moat, I think this is a moat. Look at this return on invested capital, 47 to 54%. Great company. Let's check out some of the things they talk about in their earnings release. Now, an interesting stat here, guys. Global comparable store sales declined 3%, driven by a 5% decline in comparable transactions, offset partially by a 2% increase in average ticket. Yeah, I don't like that. That's not good. To me, though, I've been talking in a lot of videos about a weaker consumer than we think. And when consumers are feeling weaker, I think they're going to take away from their coffee. Now, does that mean it's going to happen forever? I don't think so. So as Starbucks continues to fall because of these things, I'm going to continue accumulating shares. But you can't just follow me with doing that. You have to understand the thesis behind it and feel that thesis. But I look at these things thinking, this is awesome. The company opened 526 net new stores in Q3, ending the period with 39,477 stores. 52% are company operated and 48% are licensed. That's incredible. Now, at the end of Q3, stores in US and China comprised 61% of the company's global portfolio, and consolidated net revenues declined 1% to $9.1 billion. Wow. Okay, so not a lot of good news here. But remember, I believe the consumer is weaker than people think. This is going to happen. Do I think same-store sales are going to decline forever for Starbucks? I do not. They're still opening more stores. There's going to be some negative news on the company. The question becomes, is that going to drive your decision on the company as being forever going to zero? It's up 2.25%. Why? I have no idea. They missed on revenue. They barely beat on profit. That is how fickle the market can be. And that's what I want you to remember. Guys, I'm very active on Twitter. I talked about Starbucks a lot. By the way, follow me on Twitter at @EMPaulG. If you want to interact with me, see my comments. I post a ton on Twitter several times a day. But I'll have people on Twitter telling me Starbucks is past its prime. It's not a moat. No one cares about Starbucks anymore. And I'm just like, okay, $9.1 billion tells me people do still care about Starbucks. Does it have a 1% decline? Sure does. Does that suck? Yeah, it does. I'd rather have it growing. But you have to ask yourself, do you think Starbucks can have more revenue and profit in the next 10 years than it is today? And if you can pay a good price for that, I want you to watch our other channel and watch our Starbucks videos to see my analysis on it. Stock number two, Microsoft, $2.95 reported per share in profit versus $2.94 expected, $64.7 billion versus $64.4 billion in revenue. They beat on both. And the stock is down 6%. Holy cow. $3.97, all-time high recently of $468, literally on my birthday, July 5th, 2024. Guys, that is my birthday. I want you to do me a favor. I want you to put on the calendar next 2025, my birthday. My Venmo is at Paul-Gabriel. And I want you to Venmo me $10 on my birthday next year. If anybody does that, I will laugh. I had that actually happen a couple of times. And somebody's going to put a request in for money. I'm just going to deny it. But the point is, Microsoft just beat on both revenue and profit. And the stock is down significantly today. After hours. Oh, wow. Even during the day, it fell. I thought the market was driving and the Dow was driven earlier in the day from the stock. How much things change. Isn't that incredible, guys? Absolutely incredible. Look at this, guys. Here's the best part. Look at this dividend here. 0.67%. The company is a $3.2 trillion company. $21 billion paid. on 0.67% dividend yield. 45 times free cash flow, 37 times PE. Oy vey. High return on invested capital. Guys, Microsoft's a great business, and I want to own Microsoft in the future, but I want to own it at the right price. And I have the biggest fail on Microsoft. I was buying Microsoft at $17 to $21 back when everybody thought it was dead, and I sold it at 60, saying it's overpriced, it'll fall, and it never fell below 60 again. This is part of the annoyance of being too strict about your rules. I've learned since then to let great companies compound on themselves. Because right now I'd buy Microsoft all day long at 200 and some dollars. That's what's amazing. I don't know the exact price, but it's somewhere in the 200s, and I'd buy it all day long. I missed out on 3 or 4 times more growth than the 3 times I already made just from doing that. That's what stinks. But such as investing is a good lesson learned. Now I'm going to let my compounders compound through thick and thin. Great companies bought at great prices. You need to hang on to them. You don't get those opportunities very often, but they do come along. And when they do, you got to be ready for that. Stock number 3, AMD. AMD just reported. They beat by a penny, 69 cents versus 68 cents, and revenue of $5.8 billion versus $5.72, up 4% after hours. Guys, big growth in their data storage. Big growth there. This is a competitor. Guys, look at this company. $143 a share. Look at this. Look how low it got. Recently, in the last 9 years, it was as low as $1.60, $1.50. Incredible. You'd have a 100-bagger almost in a matter of 9 years. AMD was a struggling company. They're making chips. And by the way, they made phenomenal chips. But for some reason, they go up and they go down, and they go up and they go down. It was a roller coaster. Are they finally here to stay? I don't know, but I think they're a great company. I think they make a great chip, and I think they should be here to stay. And now they're making more money. And that's wonderful. The question is, how much more money? Guys, this is only 3. Oh, wow, look at this. A mere almost 5 months ago, the company was at 227. It's now at 144. That's a fall of 33%. Even with today's great earnings. The market's very fickle. Look at this. Up, down, up, down. What's going to happen from here? Look at this. Look how long it took. In 2000, it hit a high of $44.44, $46.38, $48.50. $48.50 seems to be the high back in 2000. It did not hit that price again until basically 2020. 20 years later. Because if you overpay for a stock, doesn't matter how good the company is, doesn't matter at all, you're going to struggle to make money. The most important part about making money is being able to pay a cheap price. Now, guys, if you like this analysis, if you like looking at these things, I still have more to go. I want to talk a little bit more about AMD and Microsoft. From AMD's quarterly report, look at this. Q2 2023 versus Q2 2024. Revenue up 9%. Gross profit up 17%. Gross margin up 300 basis points. That's 3 full percent. Guys, I can't tell you how hard that is. That is so difficult to do. Companies are excited about getting 25 basis point, 0.25% growth. They got 300 basis points, 3 full percent. That's incredible. Operating expenses only up 5%. Operating income up 1,445%. Obviously, operating margin was huge. Net income was up 881%. EPS per share up diluted was up 700%. Now, the non-GAAP was where they made 69 cents versus 58 cents. I mean, incredible numbers here, guys. Everything is awesome. But again, is it the right price? That's the question you have to ask yourself. How much money did it make to justify a $145 price factoring in the future? Guys, if you like this way of thinking, if you like hearing these updates on the numbers and reports, we do 4 or 5 of these videos a week. Do me a favor, subscribe to the channel. I appreciate your time.